If you need to get a loan to buy a home, picking the right lender is one of the first things and one of the most important things that you need to do. And if you don't do it right, it can be catastrophic. So in this video, I'm going to show you exactly what to do and how to do it. Unfortunately, it is something that many homeowners get wrong, and I see it all the time. My name is Michael Hausum. I'm an active broker in Southern California. I'm also the founder of House Advantage Academy, where I help realtors become better realtors. But Fix My Realtor is totally different. It is directly to help home buyers and sellers make elite, expert level decisions, whether they have a realtor or not, or if they plan to never use one. The tagline for Fix My Realtor: buy like an insider and sell like a pro. So this is going to be a deep dive, okay? Now, if you've ever gone online to look at mortgage-related stuff or filled out some kind of form online, you've been getting flooded with mortgage lender advertising. The amount of money spent by lenders to get your business is enormous. So what I'm going to do here now is help you make your way through that fog. So there are four main parts that I'm going to discuss. Number one, what your goal should be. Number two, the differences between lenders. Number three, how to actually find the right one. And then number four, how to compare interest rates. Now, real quick, before we get to those four main points, there are two other things I want to emphasize. Number one, finding the right lender is not about the interest rate. Not about the best rate. It actually might be the least important part of the whole thing, all right? Any good lender can get you a great rate, and you have to remember that. Number two, a good lender is a tool to help you get the best result in buying a home. Number two, a great lender is an essential tool. So this is way beyond just financing the purchase. That's a given. But a tool to help you get the optimal result, that's what we're looking for. And this right here is the most important thing. And it is the mindset all the way through this. The better the tool, the better the result. So not only is it about how they perform as a lender, which is an obvious and critical piece, but also part of positioning you as a home buyer. Every single experienced listing agent that you're going to come across has a book of nightmare lending stories with some sort of screw up that killed the deal. So in almost all cases, you're going to be perceived of as having a weakness compared to an all-cash buyer. So part of the agenda that we're going through here today is to work to offset that perception of a lack of strength, okay? So this is part of that agenda, to take steps in such a way that you can communicate risk reduction to a potential seller. So we will get to rate shopping and how to do it. We need to remember that the elite expert perspective about getting a loan is more than just about arranging the money to borrow, okay? Now, point number one, the goals and reasons for talking to a lender. Goals and reasons. So this is why you want to talk to them. The first goal is to find out what your actual qualifications are. How much of a house you could buy, how much money you could borrow, all based on your income, credit, and assets. So this is the qualification part. And that is, how much money will they lend you? So that's the first piece that we want to find out, okay? This identifies your purchase limit ceiling based upon what a lender is willing to do. And it'll also, this process here, will help you figure out potential obstacles in the way of getting a loan. That's very important information. Job history, credit issues, documentation issues, all number of things that right here you can find out what things have to happen before you can actually get a loan. Okay? Now, then goal number 2 in talking to a lender is that they can help you figure out what you actually want to spend. And this is the budget part. This is how much money that you want to spend. Okay? And that's a different thing, right? It's an important and sometimes overlooked step. Just because a lender said that you could buy a house at this level, should you? And even do you want to, right? Just because their formulas say that a certain number would be okay in terms of monthly payment, you actually have to figure out what is going to work for you. So this part here, the qualification step in budgeting, it's actually working backwards from what your budget is and then working into a price range. They're going to take the money that you want to spend and the monthly payment that works for you, and then they'll calculate backwards to a price range for you to focus on. And sometimes there's a difference between what the bank says that you can borrow and what your own budgeting tells you that you should. And this is actually a very good thing. The bigger the gap between a bank's number and your number, the better. And I'm going to write this in red. A big gap is ideal. So this is another strategy aspect of being an elite expert level buyer that I'm going to cover separately. The idea is generally the more money that you could borrow as a difference between what you're going to borrow, that communicates more strength to a seller. The idea is, hey, look, we could buy twice as expensive of a house as the one that you're trying to sell. We're your dream buyer. That's what you want to communicate. So these right here, these are the main goals that you have for talking to a lender. Now, point number 2, the types of lenders. Types of lenders. So there are 3 main types of lenders that you're going to run into, and they all have their own important role despite their differences. The first is a mortgage broker, and a mortgage broker is actually not a lender at all. Mortgage broker. All right. A mortgage broker is basically a middleman that have relationships with various different wholesale lenders who are all competing to try to get their business. Personally, for my business, I use a mortgage broker for a lot of business referrals, standard conventional loans, FHA loans, and VA loans. And it's primarily because a mortgage broker tends to get the very best rates. Also, they're the best source for those types of loans. So mortgage broker typically can get you the very best rates. Also, a mortgage broker is usually the best source of financing if your qualifying circumstances are more complicated. If you have complicated circumstances, a mortgage broker oftentimes will do a better job of finding the best lender for you. And this is going to be for people with low credit scores, self-employed individuals, really complicated financials, or for whatever reason, they may need a non-conventional loan. Now, the second type of lender is a mortgage bank. A mortgage bank. And they're a direct lender, unlike a mortgage broker. And they're not traditional banks, even though it has the word bank in there. They're companies that just make mortgages. Rocket Mortgage, Cross Country Mortgage, Fairway Mortgage, Guarantee Rate, LoanDepot. Those are a few examples of some of the biggest mortgage banking companies in the country, and you've probably heard of them. These guys tend to specialize in conventional or government loans, FHA, VA loans like that, okay? Now, an advantage of a mortgage bank is because they're a direct lender, they have the ability oftentimes to process and close a loan very fast. And in some cases, that can be an enormous advantage. Speed. A disadvantage is sometimes mortgage banks, they don't have the best rates, right? The reason that you've heard of a lot of these companies or gone to events in their stadiums or sports arenas is because of their massive marketing budgets. And those massive marketing budgets cost money. And guess where that money comes from? It comes from you. Now, the third and last type of mortgage lender are your traditional banks and credit unions. Banks, credit unions. Chase, Citibank, Wells Fargo, Bank of America, US Bank, about 8 trillion others. And these are also direct lenders as well. Just like a mortgage bank, they're lending their own money. And in my experience, the place where banks and credit unions excel is with jumbo loans or alternative products. Although some of them, they can be great at conventional and government loans too. But for the alternative products, especially the jumbo loans, they almost universally outperform mortgage brokers and mortgage bankers. So that would be jumbo and alternative. Brokers oftentimes don't have access to the best jumbo rates. Sometimes mortgage brokers will work with direct banks for their alternative products. So it kind of depends. Now, traditional banks also, they can sometimes be more creative with their product offerings than a typical mortgage bank can be. For the last several years, US Bank has been my go-to for jumbo loans. They've absolutely killed it. On the other hand, for conventional and government loans, traditional banks oftentimes are not an optimal choice. They are so big that sometimes they're unresponsive. They can take a long time to close a loan, and that can make them very hard to use as a tool and an asset when you need to be very aggressive. And sometimes also the banks, especially for the conventional and government loans, they're not super competitive with their pricing. They have a huge built-in customer base, massive overheads to cover, and so they just don't really have to be aggressive like the wholesale lenders are trying to get the business from the mortgage broker. One thing though, sometimes for special access clients or for people that have high-level relationships with those banks, they can provide insider deals that are totally unmatched. Insider deals. I have seen this a bunch of times where somebody will tell me that they're a premier private banking client with Bank of America or something like that, and the kind of loans that those folks get literally are unavailable anywhere out in the marketplace. But for this kind of thing, this is way beyond somebody just having your standard checking or savings account. Okay, now point number 3. How to actually go about finding one. How to find one. So how do we do that? So now that you know what you need from a lender and the way to figure out probably the best type of lender for you, now we got to go out and find one. So let's do it. The first thing is what not to do. Please don't go search on the internet or click a link on Zillow or Realtor.com or something like that. Don't internet shop. Despite the constant inflow on your phone, all right? And there's a couple of reasons for this. Number one is you risk getting someone that's inexperienced or just being lost in a sea of other applications. Now, if you're doing a refinance where timelines and an elite level system wouldn't be that big of a deal, then that's fine. But under the pressure and constraints of buying a house, it's just too big of a risk to find some rando clicking on a website. The ideal thing is to get a referral from someone that just did home purchase, roughly at the same level of loan amount or purchase price that you're going to be getting. That's the ideal. The ideal is a referral, somebody that's already gone down that road. Or you can also get a referral from a real estate professional, either a realtor, a real estate agent like me, or an escrow officer. And if you're working with the realtor, just ask them for a couple of names. An escrow officer, on the other hand, given their role of closing transactions all the time, that gives them a very good vantage point to see who's really good at what they do. And even if you don't yet have a realtor, or if you're not going to be using one at all, they can still be a good mortgage referral source. Call them up and just ask them. Real estate pro. That's either going to be a realtor or an escrow officer. Those are the two best places, okay? Main reason a referral from a real estate professional is a good way to go is that not only is that person going to have years of repeat experience, you're also going to benefit from a secondary level of pressure to perform. So number one, they're going to have a history with that person and know them and seen them. And then the second thing, this I love, performance pressure. Right? Of course, the lender's going to have an incentive to close the loan for you, right? That's when they get paid. But if you get a referral from someone that they have an ongoing relationship with, someone that they're going to continually want to get business from in the future, well after your deal closes, this is even better because there's more on the line for them than just your loan. And that pressure will help you, even if it's never directly mentioned. And in the event that something does go sideways, you call that realtor or that escrow officer that referred you, however it was, and ask for their help. Well, that's an additional lever to get performance for you. Now, two other important things right here. When you do end up talking to a lender, there are two questions that you need to ask immediately before you ever get to rates or anything like that. So there's two questions. Number one is, do they do a conditional loan approval that's fully underwritten? That is a key question to ask. And then number two, how fast can they close a transaction? Two really important questions you have to ask right up front. And the reason for this, well, let me say this. On the conditional loan approval piece, right? I'm going to go more into that in a separate thing. But my recommendation, if they do not do a fully underwritten conditional loan approval, that is a complete non-negotiable. The difference between a basic pre-qualification or pre-approval and a full-blown underwritten conditional loan approval is massive. For me, if a lender says that they don't do them, it is an instant killer. And here's the thing. A fully underwritten conditional loan approval isn't very common. Most lenders don't do them. So if you ask and then they say they don't do them, you can expect some sort of explanation of why it really isn't necessary. It's just simply not true. It is critically necessary. You need to reject them and move on to the next one. And then as far as the timing goes, asking them how quickly they can close, you basically want to find out what is their absolute limit for a lightning fast closing. And there's two reasons for this. Firstly, it is an instant view into their process. Process is king. I had a transaction years ago where my buyer insisted on using his lender. The loan officer was in Phoenix. The paperwork processing was in Minneapolis. Underwriting was in Georgia. And then docs and funding were in New Jersey or Delaware. It was a total nightmare. And if they say, well, it'll take us 30 days to close a transaction or something, they're actually telling you that they're a dinosaur with bad arthritis. You can expect for them to have a fax number, okay? In today's day and age, this is not acceptable. You want an Olympic class sprinter of a loan process. Ideally, you want an answer in here something like 2 to 2.5 weeks or less. The other reason, in addition to looking into their process, that it's important to find out about the timing, there may be a circumstance where a seller wants a fast close, quick close, and that can save you money. Or even just in an offer. Even if the seller doesn't necessarily want to close quickly, but if you as a buyer could communicate that you could do a 12 or a 14-day deal, that demonstrates strength and confidence. So you have to have a fast lender. Bottom line, if a lender doesn't have the ability to do a conditional loan approval and they can't do at least a 16 or a 17-day escrow, time to move on. Okay, now lastly, how do we compare rates? What everybody usually thinks is the biggest thing, right? How to compare rates. So big surprise, comparing rates is not easy, and the mortgage industry tries to make it hard. Now this piece here is not going to be used by everybody watching this, right? Depending on their lending circumstances. If you're working with a good mortgage broker, they're going to be already doing that for you, right? And if you've got a very unique borrowing situation and you've only got like one lender that you can use, this probably won't be a lot of help. Now, first thing you need to know about rates is almost everything you see and hear about rates online is all bait and switch. Meaning the number that you hear is to try to get you in the door, and you're probably not going to actually get that rate, right? There's always fine print that's written somewhere that doesn't apply to you. It's the oldest game in the book in the lender business, right? To bring you in at a rate that either doesn't exist or that wouldn't be available to you based upon your circumstances. So what do you do? Okay? There is a very precise question that you need to ask a lender so that you can compare their answer to other lenders. It is not easy and it is complicated, and I'm going to help you out with that, right? Before you ask the question, you need to have some basic data. All of the moving parts that contribute to a rate quote. And you have to make sure you get them all correct before you can get a good and reliable answer. So here's what you need to find. Write this down, and I'll write it down too. Number one, what type of house is it? Is it a single family home? Is it a condo? Is it a multi-unit? Is it partial commercial? Whatever it is, the type of home is very important. Number two, the loan amount that you're looking for and the approximate purchase price. And then number three, your middle credit score. If there's more than one borrower, you need to get the lowest of the middle credit scores. So I'm going to write these down, right? You've got the type of house, the loan amount, the value of the house, and then your credit score. You have to have all of that information readily available before you can shop, okay? Now you're ready to ask the question. Oh, another thing. When you ask the question of when you're comparing lenders, they all have to be asked on the very same day. Rates change every single day, sometimes multiple times a day. So if you get a quote from a lender today, tomorrow they might have a different rate, let alone trying to compare it to a different lender. Okay? So here's the question. I need a 30-day rate quote based on X loan amount and a Y dollar value on this specific type of home with this specific middle credit score. You're basically just taking these things in. You want a 30-day quote based upon the type of house that it is, the loan amount you want, the value of the house involved, and your credit score. Okay, that's the question you need to ask. And then what you want is you want a 0-point option and you want a 1-point option. And the points are the cost of the loan as a percentage of the amount that you're borrowing. So you want to ask them that too. So you're actually getting 2 rate quotes. And then also, you want to ask for any additional lender fees. Most lenders have fees, and they call them all sorts of different things. Processing, underwriting, funding, financing, anything that's from the lender, you want to get that. Okay? The 30-day rate quote, given all of these specifics that you need to use as the input for them to get the right score. Okay? Yeah, it is complicated. And it does take advanced work. But when you get these 2 answers, our 0-point loan is at, 6.25%. And our 1-point loan is at 6%. And our lender fees are $900. Once you have that, then you're going to be able to compare lender to lender. Same period of time, same inputs with the same outputs, right? And then you can figure out who's got better, right? Now, another thing to know, depending on the lender, when you ask this question, you might actually get a little bit of pushback, right? Framing the question this way not only tells them that you know what you're doing, but it also doesn't allow them to play the games that are sometimes played. The dishonest bait and switch lender is not going to like you putting them in this kind of box. On the other hand, the elite expert pro lender, they will love this question. They will respect your level of knowledge and your clear request. Okay? Now, lastly, depending on the type of loan that you need, I can actually refer you to some great national lenders, some regional lenders as well. Finally, quick question. Thinking about this and everything else about buying a house, how ready are you to buy a home right now? Are you actually at an elite level of readiness? Well, I have a quick assessment that you can take. In the matter of a few minutes, it will tell you exactly how ready you are. And if the results are not that you're at an elite expert level of readiness, it'll make some suggestions for you based on 4 different categories that the assessment evaluates. There's a link at the end of the video here and down in the description below. Coming up next, the next video is about what I referenced earlier, an essential strategy up front to prepare for buying a house that I call buyer staging. Take a look at that.